Good morning, folks. I hope you are well. So I have just the two pairs on watch today. Those are Euro Kiwi and CAD Yen. So let's break down the first of these pairs, Euro Kiwi. So on the higher time frames, we have tapped into, you can see that we have tapped into this high here, and we've moved to the downside by way of this kind of evening star formation there. Okay, and we're getting the impulse, the correction afterwards. Do excuse me, I'm still recovering from an infection which just does not seem to want to shift. So we have the impulse, the correction, just looking for further continuation to the downside, and even if this just becomes a move down to these areas to kind of retest the back end of all of this volume here, there's still enough profit potential in there, given that this is the weekly chart, for us to potentially capitalize on. So if we just zoom down to the daily, you can see the separate, you can start to see the separate corrections. We can see here, okay, we can start to see we have these gaps to this high here, to the start of this correction. As I've said previously, when we have these gaps to something which is just sat above an area of volume, it's often the case that people that were selling here put their stops in this area, and then we tap that area, and then we move to the downside. Okay, so kind of seeing that as a separate piece of structure. It's been quite corrective on the way down all in all, but that is how Euro Kiwi moves. Okay. So here we have this, that you can see it a bit more clearly. We have the gaps to this high, all these gaps here, a wick to it, another gap, and then we wick. This is what I was talking about yesterday, where we have the wick fills, where when we wick to an area, and we did it twice there, without wicking through it, it's usually the case that price will come back up, fill the wicks, or the wick in most cases, but if there's a couple of them, fill the wicks, and then start moving to the downside. Okay, and we got that there immediately afterwards, or after price had consolidated for a little while. What seems to be happening now is that we have this kind of V shape. So if you think of this, when people are selling here, where are they likely to have their stops? Probably just above here, because many people believe that this acts as resistance now. So they think it's safe to put their stop above there. They get tagged out. Price starts to drop. Initially, I was looking for a 4-hour risk entry here, so looking for a 4-hour rejection candle, which looks exactly like what this 4-hour candle is looking like at the minute. But if we just measure this up a little bit, size it up, the stop will be quite large on this, and I'm not really interested in. We've got some significant highs down, lows down there. If we just look at this, these lows are visible on the daily chart. Not so much on the weekly, but these lows are visible on the daily, right? Now, even if price was to keep going at this area, it's likely the case that we would, because it's a daily low, we would stall in that area, okay? Even if we did keep going, or pull back 50% of the move before continuing. So I want to ensure that before we get to that area, there's a decent amount of decent amount of profit potential. And if we just size this up, if it was to close something like this, we would only have potentially about 3% to the low. I'm not really a big fan of that kind of risk to reward when we're approaching a kind of higher time frame low. So what I'll be looking for specifically is, if this was a washout candle with a big wick above, okay, where I could kind of stop crop through the wick, which is what we do, we would have more like 6% to work with, and I would be interested in that. But you can see how this candle is forming now. That's not likely going to be the case, where it doesn't make sense how that could be the case. So what I'll be looking for is, I'm just waiting for a little correction afterwards instead, right? So I'm looking for something like that. I'm looking for this push down for us to get a 1-hour candle which looks a bit like this. We're back below the area of value now. This active 1-hour candle is going to close in about 13 minutes. This looks very impulsive for a move to the downside. Okay, we almost have a failed buy structure, which is what I quite like. Price started to form this potentially a bull structure to push higher, and it's failed. It looks like it's failing. Okay, we've even kind of retested the back end of this on the 15-minute. So when we've also just touched on it, we've tapped into this consolidation, which broke through all of this volume here. Okay, so we had all of this volume here. We tapped into the area of consolidation, which broke through all of that. Okay, notice this wick didn't. Okay, the consolidation which caused the breakout of this of all of this volume was this consolidation here. So we've also tapped that. You can see it starts to sell off. People get trapped in too early. It taps the stops that are just sat just above. Then we start to shift. So there's lots of context to this, which is why I like it. There's lots of, the sellers getting trapped in, the failed buy structure. There's lots of little confluence factors besides the ones that I just showed you a moment ago. So literally, I've got a Google Calendar reminder to remind me to check this in just under half an hour's time, just to see how this forms. Because if we get a 5-minute consolidation like this, where I could get a tighter stop loss as a minimum, or a 15-minute consolidation, so 6 to 8 corrective 5-minute or 15-minute candles, depending on which one forms, I would have about 4% to work with to that low, and then I would be targeting that gap to that sharp move. So we have the sharp move there where there was a huge rally last time around. That gives me an indication there's liquidity there. The other clue that there's liquidity there is that we gap to that area. A lot of impatience would have happened around that area. Okay, people start buying, but it only moves so far before it starts to come back down. And if we just measure this, so measure it from the impulse, I'm pretty sure we know what we're going to find, because these things usually line up mathematical. I hadn't done this before the video, but what do you know? That would actually line up mathematically there, because within these impulse correction continuations, the continuation leg tends to be of a similar length to the impulse which has preceded it, which just so happens to mathematically line up with that low that I would be targeting. So that also makes contextual sense. It's strange how these things line up, but you've got to remember that these are psychological patterns. Okay, so we don't need indicators on the charts to analyze human behavior, because we can see the human behavior by way of the patterns which repeat themselves over and over again. And these patterns that we look for are loosely based on Elliott wave theory, which, as I understand it, was discovered in the 1930s using data which dated back, newspaper data which dated back to the 1860s. So these patterns have repeated themselves for, how long was that, 160 odd years. Okay, so there's no reason to suspect that even with the introduction of AI trading and all this kind of stuff, these patterns still repeat themselves, because behind all of this is people. Okay, and people make the same mistakes in life as they do in trading over and over again. So CAD yen. So previously, if you remember, this is where we adjust our sales. I was seeing these as potentially separate structures. So we had this, we dropped out of that, and then we were gapping, right? We were gapping. This is where being neutral and not being egotistical actually helps you in trading, to not just get into trades you shouldn't be getting in, but to pivot when the market changes direction. So last night, my forecast last night, because we were gap into this area, okay, we get gap into this area, okay, gap. The start of all of this consolidation was here. We tapped above it. Now, previously I said I was looking for a break above. To me, this wasn't really a break above so much. It was a tap above. But what I was looking for, after the market pushed down, I saw this consolidation here. So I'm just giving you my thought process in real time. I was looking for this because even though we didn't break above, right, when price taps into an area, it does break ever so slightly above and forms something this deliberate. So a structure which I could see the structure of on the 1 hour chart. This is very deliberate. This is about as deliberate as you'll get. That price is basically saying we don't need to break above, and we don't need to tap into these highs to push to the downside. So this was my forecast last night, a structured 1 hour flag, and I thought we might get that, but price gave us a message. Okay, we didn't form that structure. And often when a structure doesn't form and people think, oh, I've missed the move, the fact that it didn't form a structure in the first place is often an indication that this was not the move that you thought it was. Okay, so when we don't get the corrections on the way down, we get a little one here, but that would have been risky because you could have been tagged in, tagged out, and then price pushed up to the next high, and then this whole thing was actually a bull structure. When we don't get these corrections on the way down, it's often the case we're going to do that. Okay, so what is price showing me now? Well, what it's telling me is that it didn't find enough liquidity from this high here to send it to the downside, and that's likely because there is a consolidation sat just above, which just so happens to be the retest to the back end of this. So we have a sharp move there, and all in all, this is one long correction. I was just separating the structures, but we can't deny the fact that this is just one long correction, and the start of that correction is here. If people believe that this, once we broke below, now acts as resistance, where are they likely to have their stops? Just above here, okay? And the clue is that we are approaching that area structurally, okay, by way of this 1, 2, 3 touch structure. Now, I personally won't be looking for a risk entry from the top here just because of how wide this whole thing is relative to the move down which has preceded it. We run the risk, if we try and call the tops here, of this whole thing being an M-style pattern where we push up to the top, which is what often happens when the correction becomes very wide or voluminous, I do like that word, relative to the move down which has preceded it, okay? So I'll be waiting for an insurance entry, just a little push down from this area, especially as well because if we just measure this, so I'm doing what I just did a minute ago on the other pair, right? So if we get an impulse correction continuation, if this is the completion leg of this impulse correction continuation within this reversal structure, you can see just by looking at this that because this is slightly steep. So what I mean by that is the base didn't form down here, which would have meant that this lined up mathematically more with there. Because it's got a bit of a gradient to it, that could actually push this higher to complete this impulse correction continuation, where the continuation leg is of a similar length to the preceding impulse. Okay, so that's another reason to not want to call the top. The continuation leg isn't always of a similar length, so we could actually reject from this area, but a lot of the time it is. So rather than try and call the top, as it were, what I'm going to be looking for is a tap into that area, a push down, and then if we did push into that area, especially if we broke above and pushed back in, that would tell me that we've likely stopped a lot of people out with their stops above here who believe that this now acted as resistance. Okay, so a little push down, you can see we're moving up to that area now, tap into that area, something like this on any 5 minute or above time frame, and then I would look to target that low as a first inflection point. And I personally think that if we tapped out all of that liquidity, we're then likely heading down to the start of this correction, which this low near missed too, and that would be where I would be targeting. Shall we measure it and test the theory? I think looking at this, we'd probably end up a bit lower, but yeah, and if we measure there we go. If we actually measure that, it actually lines up mathematically with that sharp move there. So once again, these patterns actually line up mathematically, but I'll be targeting just that area as because we've got some that's a solid target to be working with, and it's more than meets my criteria for setting a profit target whilst trailing my stop at the same time. So that is the two pairs that I'm going to be looking at today. Of course, if I place a trade on these, as I always do, I will bring you a trade recap. It might not immediately be the very next day, depending on what commitments I've got going on, or whether TradingView throws a wobbly like it did last time I tried to make a recap. But I will, as I did when that happened, bring you a trade recap at the next available opportunity. Have a great day, folks, and I'll speak to you again soon.